Okay, so let us get started here, guys. First of all, we've got this wonderful little disclaimer. It's important. And I do want to just say, guys, this presentation is going to be a little different from the one I did a couple of weeks ago. This one is meant to be a little more interactive, right? You know, they always tell you during these events, they used to train us to do these types of webinars, right? I always wait till the end to take questions, right? Now, that's when you really have a finite amount of time. Now, I'm not going to be here at 6 o'clock, but I also don't have a hard stop at 30 minutes or 60 minutes. We'll probably end up somewhere in between. But this is meant to be a little more interactive. You know, we're talking about trade management, which is sort of the intersection of trade mechanics and trading psychology. This is why trade management is so difficult, right? You would be surprised how many people are able to either build or acquire, you know, purchase or whatever, somebody teaches it to you, a system that has some sort of statistical edge, right? It's when deploying it that it becomes the problem. There was a very famous prop firm in New York. Actually, when I did one of the Traders Expos out there, and here you can see the picture from that particular expo there. I actually met this guy and talked with him about a lot of different things, and they did an experiment, right? They took 100 people, smart, intelligent people, who had no history of trading. Okay, they didn't know anything about the markets, and they gave them a playbook, right? A statistically proven trading setup. They taught them how to enter trades. They taught them how to exit trades, and then they gave them what they thought was a live account. It turns out it wasn't. It was a sim account. But this system had been traded successfully for years. It was a stock trading system. I want to say it was 91 out of the 100 traders just failed miserably because they had no training, right? They didn't understand how to manage trades, even with it literally in front of them. Here's where you get out. Here's where you know. It was a very interesting study. They didn't publish it. I wish they did, because I would love to read the methodology and all that behind it. And this guy just literally gave me like a 5-minute summary, but it was very, very interesting. And it just goes to show this trade management. Like I said, for those that just got here, it's the intersection between trade mechanics, right? Getting in and getting out at a specific point, and trader psychology, which is where our emotions come to play. So for those of you that don't know me, because I know we've had a lot of people come in over the course of the past few weeks. My name is Matt Hensley. I'm the head of trading education at Tiresias Trading. That's my company, and I'm it, right? I don't have any interns, no marketing managers, no legal department. It's me and me alone, and I love it. I will never. I got into trading, right, to never work for anyone again, and then in the education world, I ended up working for people I enjoyed. I had the luxury of only working for people that I respected and wanted to work for, but still, I'm never doing it again. So also, guys, you'll see right down here, I'm the host of Beyond the Bell, and this is a post-market wrap show, which I do every Monday through Thursday. Obviously not today because I'm here right at the close. I've done this for off and on for about 5 years in 4 different companies. When I was working for TS, we had about 2,500 daily viewers on that, and I just restarted it this week. There's a Tuesday episode and a Wednesday episode. Obviously, nothing here, and then we'll resume on Monday. It's on my YouTube page, which I will. I will put the link in right here. You are welcome to give me a follow there, so it'll alert you whenever I go live. Okay. All right, let me pull one thing up here, guys, and then we will get going. How's everyone feeling today? Everyone doing all right? I know a lot of people, if you're down south with the ice, please be careful. I'm up here in the Chicago area, so I see what's happening in Texas right now. And I'm just like, oh, it's a Monday, right? Break some ice down to Florida, right? Okay, guys, I always like to do this beforehand. What are you going to hear today, right? So we know what's coming, right? We're going to talk about trade management mistakes, right? We're going to talk about a trade breakdown from this morning, right? I made a trade. It was a profitable trade. Overall, I'm happy with it. A couple of small things I did wrong, and you're going to get that a lot, guys. You know, everybody is a millionaire trader in hindsight, right? That's not the challenge. The challenge is doing it in real time. And then I'm going to tell you about this summit, guys, that is going to be the weekend of the 25th and the 26th. It's going to be several hours of live instruction. It's specifically put together for you guys and gals here, right? For people that are in your situation, right? These funded trader companies like BluSky, and guys, I am a BluSky customer, and I've got no additional discounts beyond what's been offered to you guys. So when I come and talk about them, or I mention them to people and I recommend them, it's because I'm a paying customer, and I'm not out just saying that, right? I have no problem telling people what's platforms and what tools that I like, with the only condition that they're ones I actually use, right? So again, these guys have changed the game a lot, right? Because it's not just people. Instead of me just working with somebody who's building up an account in the background, right? They're taking $500 out of every paycheck and eventually getting to the point where they can trade. Now for less than the cost of cable TV in a lot of situations, you can get access to an eval account and then eventually, a funded account. So it's forced, in a good way, I say in a good way, it's forced educators like me to sort of step up and change our game a little bit, right? Rather than building into a lot of things, I just need to kind of give you the information, help you decipher it, and then wish you well, right? So that's what we're going to be taking a look at. I'm going to tell you all about that. Of course, we've got a couple of giveaways as well. BluSky's kind enough to give away a 50K eval account. And I'm going to give away a 30-minute coaching session. And it's 30 minutes, guys. I don't put a hard stop on my coaching session. So if somebody buys an hour, I don't I don't cut off at mid-sentence. So if it ends up being 35, 40 minutes, that's fine. But this will be an opportunity for somebody to get some one-on-one attention. So we will spin the wheel o' names at the end of this talk. So guys, first, what is this presentation is and is not? Okay, this is a breakdown of specifically what you can and shouldn't do once you are already in a trade. Okay, my actual setups, the type of things that candlestick setups, VWAP setups, all that, I'm going over that at the summit. Okay, but I asked a lot of people, you guys noticed in the room the other day, hey, what are you guys struggling with? And a lot of people don't have problems getting into trades. It's what do you do once you're in them? Now, there'll be a lot of things to talk about. How do you evaluate whether a system is working or not? Okay, and we'll get into that a little bit as well. But we're not talking about specific setups or specific types of trades. We're telling you no matter what the trade is, and really, obviously, we're all futures traders in here. But it doesn't even matter what the asset class is. We're going to be talking about how to manage these trades. Okay. So here's your first quiz question, guys. What two emotions drive your trading decisions? They shouldn't, but they usually do. Who wants to step up and be the answer here? Well, loss is there you got it. Indy got it. Killa got one of them. Amin got one of them. That's it, guys. Fear and greed. That's it. Hey, there you go. Everyone's coming with it. I appreciate that. Wife shouting at you. Well, that's as an unmarried guy, I can. I'm not married, but I'm in a long-term relationship, and yeah, she yells at me sometimes too. So I get it. Yeah, that's a good one. Okay, but yeah, greed and fear, guys. Those are the two that drive us, right? And let me just give a quick aside here on trader psychology, guys. You're gonna hear a lot of people say you have to eliminate emotions from your trading. In my experience, guys, I don't think that's possible. Maybe it's just because I can be overly emotional at sometimes, but I don't think it's possible to eliminate emotions from your trading. Now, what you can do is not let them influence your decisions. Okay, those are two very, very different things. There is nothing more personal to a lot of us than our money. And I'm not here to rant, greed is good, Gordon Gekko and all that crap. No, money is what, puts food on the table, puts clothes on our backs, especially if you have a family. It's very important. I'm not a big things guy, as I've said. I'm an experiences guy. I just booked my Airbnb and bought tickets to St. Louis Cardinals opening day. I'm a big St. Louis sports fan, where both my parents grew up. And so, I was able to do that. Pay cash for all of it. I pay cash for my car. You're not going to see me posting things on social media. Look at my Lambo or any crap like that. I don't drive a Lamborghini. I drove one once and it was, I don't like them. But anyway, we get Cubs fans. All right, well, anyway. So again, fear and greed. All right. So we have to try to eliminate those from our decision-making process. The fear of loss drives so many decisions, guys, and especially most traders. I am one of these. Most traders, absolutely easier said than done. Most traders have such a crippling fear of loss that it influences almost everything they do. They cannot conceive losing in a trade. There's Mark Douglas, one of the sort of progenitors of trading psychology, talks about this. There's literal psychological damage that's done when you sit there day after day losing money in the markets, and I can attest to this. Okay. It can be, not to equate it with real trauma, war zones or anything like that, but there is trauma involved in this, right? It can just destroy everything that you think and that you do and go from there, right? So there should be three things true of every single trade. Okay. The first one, the edge should be identified. Okay. So as I was just talking about before the top of the hour, and I hopped on about 10 minutes early, we were just chatting, so you didn't miss anything if you came a little late. So we had a pullback this afternoon, right? And again, I don't have my, okay, well, we ran up to just about 40. What? No, I'm sorry. I'm going to unplug this. Google searching ran up on. Anyway, so we ran up to 4,200 and we retraced. Now I was sitting there as we were moving up, and I think I posted this in the in the room. The markets were at highs, and so was the VIX, right? And I wasn't seeing things like the ADD, the ticks, some of the market indicators that I watch. They weren't buying, joke. They weren't buying the move higher. So I'm sitting there, like the lioness in the weeds, right, waiting for the prey to come. I'm sitting there stalking a trade. And sure enough, we turned and ran in the opposite direction quite a bit. But you know what I didn't get? A setup. Okay. So I'm sitting there watching, at least not a setup that I personally trade. There wasn't a candlestick setup that I trade. There wasn't a VWAP setup that I trade. So I didn't have an identifiable edge there. Now, yes, my thesis played out, but I didn't have a setup. And this is something, if you talk to any of my mentorship clients, I swear to God, half of them probably have it tattooed on their arm at this point because I say it so damn much. A trade is where a thesis meets a setup. Okay, you have a thesis of what's going to happen, and then you have a setup. Too many people take that thesis and they just run with it, right? And sure, if I had done that today, I would have made some money, a little more money. But you know what would have happened to me tomorrow? I would have ran with a thesis and I would have gotten burned. The next day, I would have ran with a thesis and I got burned. Trust me, I traded with a thesis and not a setup for many, many years, and it just slapped me in the face again and again and again. You hear about those people that lost 20, 30, 40 grand when they first got started. I was one of those people. Got it all back and then some, quite a bit then some. Okay, so I can sit here to people that are struggling with that and literally say, yeah, that was me 8, 9 years ago, right? Okay, so an edge should be identified. And guys, what is an edge? Okay, because everyone defines these things differently. It's one of the things in trading that really bothers me is there's different definitions for the same word, like volatility and whatever, breakouts, breakdowns, the whole nine. So an edge is just listen very carefully. An edge is nothing more than an indication of a higher probability of one thing happening over another. Now, do we want maybe slightly more than a 50% edge? Yeah. But technically speaking, 51%, if something happens 51% of the time, that's a statistical edge. Okay. Yes, we would like it a little higher than that. Okay. But an edge is nothing more than a probability of one thing happening over the other. So to identify edges, once you're trained to it, it's actually not that complicated of a process. And again, I'm a KISS trader, guys. Keep it simple, stupid. I don't have very many complex setups. I have a couple of basic setups based off a couple of basic tools, and I look to the markets and for what's going on and things like stops and icebergs for those of you that are bookmap fans, for my edge, right, and for my statistical edge. Okay. So every trade should have an identifiable edge, right? So for example, for VWAP traders, just a basic bounce off VWAP. I call it a VWAP tap. Okay. For me, at least in the years that I've been trading it, there's a statistical edge in a bounce off VWAP when the market internals back it up, right? So for example, this morning, it was the trade that I took and we're going to review it in a few minutes. um, we got to bounce off VWAP, and at the time, the ADDs, the advanced declines, were reading an extreme positive number, right? So that's a go trade for me at that point, just based on those two things alone. And I didn't see anything in the, at least not initially, in the icebergs that backed it up or dissuaded it. And then we got some pretty strong icebergs later on. Okay, but I had an identifiable edge in that trade. Okay, so you can basically categorize your edges as tools, and how do you decide when and what tool to use? No, an edge is not a tool. Is not an edge. Again, there's no definition for an edge other than a statistical probability, higher probability of A happening over B. That's it. Okay. Yeah. So tools can help define the edge and identify the edge, but the edge itself is nothing more than a statistical probability. Okay. Yeah. Okay. Okay. Yeah. Well, no. A tool is something like an indicator. Okay, like VWAP, MACD, RSI. Those are tools. Okay. And again, I don't blame you guys for this. The terminology and the vocabulary in trading gets so, you guys could go do a webinar for somebody else tomorrow. They're going to say the same words I do, and they're all going to mean different things, right? I'll get a little more into defining edge and all that, but that's not really what this talk is about. Okay. Yeah, the terms are fluid, which is why I always try to define them. So a setup is a trade, right? It's like a bounce off of VWAP for me is a setup. Now, again, I have to see the internals. I've got to have candlestick backup. I've got to have a lot of different things before I actually punch the buy or the sell button. Okay, but yeah, setups are nothing more than just again, something happening on the chart that leads me to believe a trade is coming. Okay, so the next one, guys, risk should be predefined. I cannot tell you how much it personally, this is going to sound dramatic, but I'm going to say it anyway. It personally offends me when people get into trades not knowing where they're going to get out. Okay. For all of this talk, guys, I'm talking about trade management. Let me tell you this, 90% of the work that you do for a trade should be done before you enter the trade. Okay. So again, what's the very first thing? I'll go back to VWAP, and like I said, I closed most of my charts, so pardon me for not pulling anything up. But let's say I'm playing my basic VWAP tap long. Okay, price action moves down into VWAP, bounces off VWAP, and goes from there. Okay, my risk is predefined. So what I mean by that is I'm looking at the chart, and my ATR, the distance between VWAP and the dev bands is helps me define my risk. And I'm going to give an example of this exact trade once we're done with the slides here. So let's just say I'm going to set my risk at halfway. So I'm going long off of VWAP, and I'm going to set my stop at halfway between VWAP and the -1 standard dev band. Sometimes I set it lower. This morning I set it a little lower, simply because there wasn't that much room between those. And guys, I'm going to get some angry comments on this one, but I'm going to say it anyway. I'm not saying it's not possible to scalp in these guys. I mean, I've met some people that at least claim they're very good at it. Good for them. It's just not my cup of tea, and you have to let trades breathe. People that trade the NQ and they're like trading for 5 handles. I look at you guys like I look at just you drive me nuts. It's just that, like, especially just because the volume of trades. I have enough trouble finding 3 to 4 trades per day and being very picky about them. Somebody who gets into 40, 50 trades a day, those people drive me nuts. Hey, again, if you can do it, good for you. And I'm not here to, I'm not saying you're a unicorn. I'm just saying I've never seen one, right? Well, I mean, and again, maybe there's institutional traders that can do that because they have access to a lot. I'm just talking for me. It's just, yeah. Okay, Nick. Good luck with that. But anyway, it's like I said, if honestly, honest to God, guys, if you have a setup and it works for you, good for you. I'm not going to tell you not to do that. I'm just saying that's not typically what I work with clients on. Okay. But anyway, risk is predefined. And my risk is typically based off both structure on the chart, right? Hourly structure, or areas of the chart where there's like a big iceberg order. So a big iceberg buy order comes in. I know that if we crack that ice, right, that whoever that big order is going to look to get out of his or her position, right? We don't have time to break all that down, but risk is predefined. So my stop goes in, and unless something drastically changes in the market, it doesn't change. Okay. My initial scale out point, the point where I begin scaling out of the trade. So for a VWAP tap long, it's going to be my first scale out is going to be at the around, give or take, the first standard deviation band, right? The +1 standard dev band. Okay. That's not going to change without major new information. Now, again, if I'm trading 6 contracts, I'll scale out 2, right? I'll scale out in thirds. In fact, I almost always scale out of thirds. This trade, I'm going to show you a little bit. I didn't hit the plus button as many times as I wanted, so I was in 5. So I got out 2, 1, and 2. Okay, and again, I'll break that trade down for you in a little bit. But the risk was predefined, and going with it, guys, max loss is acceptable. Okay, I've worked with over 200 clients one-on-one, and I do a thing in my mentorship program, guys, where it's not just you watch me trade, right? Like live trading rooms, I like them, right? There is a lot of educational value in watching somebody very good do what they do. But in my experience, that has rapid, what's the term I'm looking for? The economic term, rapid diminishing returns. Right? You can watch a really good trader. If you're a brand new trader, you can watch a really good trader do what they do for a couple of months. It's going to help you, right? You're going to learn a lot. But after 3 months, 4 months, 6 months, a year, it's just not, especially if that trader's not quite the style of what you do, it's going to get old pretty quickly, right? And it drives me nuts but anyway, one of the things that I do is I watch my clients trade, right? That's part of my mentorship program, is one of the one-on-one. I look over your shoulder, you screen share with me, and I watch you trade. Sometimes I'll comment, sometimes I'm just going to watch, and then we'll talk about it afterwards, right? No different than going in the cage and swinging a couple of times, and then we'll look at the film, okay? And sometimes, well, yeah, somebody, in fact, this happened about a month ago. I was working with a client, and they said, "Well, I'm setting my stop here, but I don't expect it to get down there because I really can't afford to lose that much." I said, "Why the hell are you setting your stop there?" I'm not saying we want that loss, right? But every single trade, from the moment you get in and you set your stop loss, that should be a completely acceptable outcome. I'm not saying satisfying, I'm not saying happy outcome, but I'm saying, okay, based on my risk reward, based on the statistical edge that I have here, going down to the max loss is an acceptable outcome. Okay? You have to be able to accept loss in this game. Guys, if you can't stand a little red on your screen, holy crap, get out of this game right now. Because that's, I would love to see the statistical percentage of trades. Maybe you guys get in enough trades that they can, somebody can share this information, that if you're in a futures trade, that it's red at some point. Okay, every ES trade that I get in, it seems to be at some point I'm 3 or 4 handles in the red on that trade. Now, ideally, things, I may go up a little bit, down a little bit, then we break out, break down. But if you can't handle seeing a little red on your screen, guys, whew, same thing with option traders. I still do options in my IRA, but that was what I used to teach, and it was, you guys that have ever traded options know you're red usually from the time you hit the button until things really take off, right? But I want to go back to number 1 for just a second, guys, because I have an example of this. Again, the edge should be identified based on a trading setup, right? A playbook. Okay, and it can't just be I'm buying because I think it's going to go up. So I used to, when I first got good at trading, I was mainly a swing trader, and I had a setup called the snapback, right? And so I've taught this setup to a lot of people over the years. And actually, I want to break it out and test it in futures. It's a daily chart setup over a long period of time, but I want to try it on like a 5-minute and see if it works, because it's been one of my most reliable swing trading setups over the years. In fact, I may pop another eval account and start that one. But anyway, I was working with somebody, right, and he took a big loss on a trade, and so I was talking with him, and I was like, okay, well, what was your setup for this? He says, well, it was almost a snapback. And I was like, no, stop. Okay. this particular trade setup has a checklist. Okay, there's 5 things that have to happen. If 4 of those 5 things happen, it's not a snapback trade. Maybe another kind of trade, maybe something else, but it's not a snapback trade. And so I said there's no such thing as snapback-ish, right? It's either a snapback or it's not. So for a VWAP tap trade, I have very specific criteria that make up that trade. And it either is or isn't. Okay. Hey, like I said, Nick, you know what? I honestly, I wish everybody the most success in this game. I really do. And if you can consistently catch 100 points off a 5-point risk, man, I'll learn something from you. Yeah. Like I said, I've seen a lot in this game, so I do not discount anything. But I'm just telling you, that's okay. Well, that's a whole different animal then. If you're blowing up every few weeks, whole different animal. Okay. So, guys, let's talk about some of the biggest trade management mistakes. Okay. Thanks for that laugh. I appreciate that. That's oh man. But no, I mean, listen. I will say this: I don't care, what your faith perspective is, but to me, karma can be a very real thing, and that's why I don't care if it's somebody I get along with, don't get along with. I've met a lot of great people and a lot of very interesting people in this business. If you're a retail trader, I root for you. I don't care. We're all on the same team, right? Us retail traders, we are all on the same team. I wish nothing but success for every one of us, right? All right, so let's talk about these. First one, guys, is overthinking. Okay, this creeps into every trader's mind. Okay, this is just as soon as you get into the trade, there's almost always going to be some doubts or some second guessing. If you second guess almost every trade you get into, you know what that makes you? A freaking trader. That's just how it is, right? Again, it's not the emotion that's the problem. It's letting the emotion affect your decision making. Okay? When we sit here and again, almost from the moment you push the buy button, right? You're, oh man, was that a good idea? Oh, I don't know about this. Oh, it's 5 points down, right? I mean, it's again, it's just the way our minds work, right? We just Apple and Amazon, are they doing a thing? Oh yeah, the ES is taking a dump right now, but the NQ is no better. Y'all had to distract me with this, huh? Well, Meta was actually, I have some Meta calls in my IRA that did very, very, very well today. Actually, I'm going to call some of those in probably tomorrow. Um, but anyway, so Apple and or Amazon did not impress, huh? Well, that's tomorrow's problem. Yeah, no, they were. They were. I bought again. This is a whole different thing, and in my IRA, I just do a lot of fundamental stuff, right? Companies that I think aren't going anywhere for a while, they're trading at a very, very steep discount. I have a pretty good size IRA, so I can do that, right? It's not something you can do really with a $2,000 or $3,000 account. But again, yeah, it's something that there's a reason that when you have billions of dollars, it's not that hard to make a few million more, right? But as far as the active trade, what we guys, don't make any mistake. What we do is harder than those guys on Wall Street. What they do, right? It really is. And you know how I know that? Because they've told me that's the case, right? Guys that have $1 billion accounts that can sell credit and options, or anytime something's traded in the discount, buy a lot of it and can sit on it through 10-20% losses. I'm not saying there's not skill involved in that, but what we do, it's more difficult. So overthinking, guys, all right? And this relates directly to number 2, sweating every tick. Okay, now, if I turn on my camera, it kicks a bunch of you out of the room, so I'm not going to do that. But how many of you, I want to draw you a mental picture. You get in the trade, you hit the buy button, and your face gets closer to the screen. Whether it's a chart, whether it's the dome. I mostly watch my trades on Bookmap and a dome once I'm in. I'm not as looking at the chart. But how How many of you you lean forward in your chair, or your face gets a little closer to the screen? Show of hands. Show of hands really quickly. I gotta fill up a little more water. Okay, so yeah, most of you. I do it too, guys. I do it too. Now, thankfully, I don't do it on every trade, but I do it a lot as well. Okay, Car Ramrod. I love that name. That's pretty funny, meow. Yeah. So again, so this actually, you know what I try to do on most trades, guys. If it's early enough, in fact, this trade I'm going to show you in a little bit. I entered. I set my initial profit target, and I put my stop. I put them in. You know, I put those orders into the market. And you know what I did? I got up and again, I sit in my office is, oh, what is it? It's about, it's a pretty good sized office, about 15 by 20. It's a pretty good sized room. And on the other side of this room, again, I don't have my camera on, but behind me is a small studio where I record my show. And then behind that is a table, has a coffee maker and, you know, some snacks and fridge and all that stuff. So when I hit, if I can do this, I do. Right? Especially if it's only one trade. As soon as I get into the trade, I get up and at least spend 30 seconds walking around because I know I'm going to lean forward and zone in on that trade. Guys, let me just give you a little tip that's a little bit of an aside here. If you get into a trade, the non-scalping kind, right? The 5 minutes to 2 hours type trades. If you get into a trade and you can't get up and walk away, because you're afraid of what might happen, just for a minute, let's just say 60 seconds after you enter the trade, your position size is probably too big. I always used to say this with swing traders, okay? Especially option swing traders. If you're staring at the screen, or not the screen, if you're staring at your ceiling at night, worrying about your position size is too big. I promise you that. Oh, I'm sorry, that sweating every tick didn't go up there. There we go. Okay, so ask yourself that. If after you get into a trade, could you walk up? Because you know, and most of you may be trading, you know, in your house or apartment. Can you go spend a minute getting a cup of coffee? Can you go use the restroom? Can you go get an ice water or whatever? If the answer to that is no, I can't do that. I absolutely can't do that. I have to watch it. Well, first I'd look at your position size, and then we're going to take a good hard look at your training psychology because that fear of loss is probably screwing up a lot, right? Does that make sense to everybody? I'm not saying you have to do it every trade. I don't do it every trade, right? I don't take more than 2 trades at a time. But I don't get up if I have 2 trades on because I do want to be just kind of monitoring. Because the only thing I'm not interested. You know, again, if I make a VWAP trade, once I set my stop, I'm not even looking at VWAP anymore. I'm looking at the dome. I'm looking at Bookmap to see where the big orders are positioned, right? And because that leads to number 3, not taking new information into account. Okay. So any of you guys that use any tool, but it's mostly Bookmap that uses that shows stops and icebergs, the SI indicators. That's one I don't look at much before I get into a trade. I look my eyes are typically glued on that once I'm in a trade because I want to see where the big boys are going. Okay, so let's say I'm just going to throw out numbers here. Okay, let's say I get into the ES at 4,000. That'd be a really weird place to buy it, but you just for math's sake, okay. And when I get in, I don't see any major orders on the screen, right? Yeah, there's a lot going on, you know, because there always is, but I don't see any areas of that dark red on the heat map, right? That make me want to say, okay. And let's say I set my stop at 39.90, okay. But I'm still in the trade 5 minutes later, and let's say then I see a very big iceberg order sitting right at my stop, okay. At that point, I'm probably going to move my stop either down a couple of ticks or up a couple of ticks. Most likely down just a couple of ticks. Not 3, 4, 5 handles. But I typically want to be positioned just below that big order, right? Because if that order gets taken out, we're probably going to either bounce right from that point or that's the beginning of a strong push again. So I'm not willing to risk another, you know, $500 in risk. But am I able to adjust a little bit to sort of redefine a little bit of that risk? Yes, because that's new information, Okay. It's information I was not in possession of when I got in the trade. Okay. Now let's say the opposite happens, right? And I'm sitting there with an order to sell at 40.10. Okay. That's where my initial stop loss order is, or profit target. And I see a huge iceberg order, or just a huge order period at 40.15. Well, guess what? I'm probably going to put my initial profit target up a few more points. I'll probably put it right with that order, because if that order gets filled, that means I get filled, right? Because if we get what typically, not every time, again, statistical edge, when you see huge orders on the board, sooner or later they're going to get filled almost every time. Now, it doesn't mean it's not going to whipsaw you in the meantime, right? I've played around with that as a trade setup, right? Any uh, major areas of liquidity within 20 points of where we're trading, I've simmed that, where it's like, okay, I'm just going to put orders in with them. It doesn't always happen, especially for retail traders with the time and the risk profile that I like. But when I'm already in a trade, it is helpful. Well, I mean, I didn't say I stayed away from the screen, right? I just said I'm able to walk away for a minute. I'm not going to go away for a half hour, right? Because I do make adjustments to my trade. Okay, so just like, for example, how I manage a trade is I'm going to set my initial profit target and then my stop loss. Okay, very few times am I going to change that stop loss. Like I said, the only time I'm going to change it is if there's new information, right? Like news comes out or a big order hits the books, right? Those things can make me change, but I'm not going to double it, right? I'm not going from a 10 handle risk to a 25 handle risk. If that's where I would be setting my stop, I'm just going to get out of the trade. Okay. If my initial profit target is hit, then I go risk out. The stop for the remainder is at break even. Okay. And then I'll hopefully, although this is, it's something I still work on a little bit. Hopefully then things are off to the races, right? And we just let our winners run. Okay. Why do I manage trades this aggressively though? Okay. Because I know what trade type affects me the most. So guys, just quick sentence for anyone who wants to, what types of trades affect you the most, either positively or negatively? Which are the ones that get your emotions to the point where you're starting to, and don't get me wrong, extreme positive emotions, guys, and extreme arrogance and cockiness is just as, if not more, detrimental to your trading than negative feelings. A loss after a big win. Okay. Lost to start the day. Okay. Andy, does that ever make you hesitant to get into your first trade then? After you moved your stop and said why? Yeah, a little gunshot. Frogwater right there. Interesting name. Boy, you just got mine, right? You just hit what I consider my biggest trading weakness. Okay. For me, losses do not really affect me negatively. Why? Because I've had enough of them over the years. Sometimes I'm wrong. I don't want to swear too bad, but S happens, right? Stuff happens. That's every day, right? I've yet to meet a trader that 10 out of every 10 is a winner, right? You're going to have some losers in there. But the ones that affect me the most are the ones that, let's say I'm risking 10 handles to make 15. And then we run up, we hit 12, plus 12 handles, and then we run down to break even. Too many times over the years, I've stopped out at break even, and then the thing turns around and runs and would have hit my initial profit target, right? Because I see the green turn into red, and it's, even though it's unrealized at that point, and I make a fear decision. I don't do it as much anymore, but I still do it from time to time. That still creeps in there. Well, if you're not able to get out until the daily loss limit, El Jefe, that's probably a position size issue, which is a trading psychology issue. It's not just a mechanical issue. It's actually both. I'd have to work with you a little bit before I could understand which one it is, or if it's both. Okay. Okay. So I'm going to take before I take your questions, I want to take 5 minutes and tell you about this event that I have planned for the 25th and the 26th. Is that all right with you guys? And then I will stick around and take questions for about 10, 15, and we'll do our giveaways. Excellent. I appreciate that, guys. All right. So, guys, after talking, I specifically planned this for you. Okay. I'm offering this to my clients and my general mailing list as well. In fact, the email's going out in about an hour. But I planned this based on what you guys told me you needed. So we're going to run for about 2 to 2.5 hours each day. And this is going to be the weekend of the 25th and the 26th at 11 a.m. Eastern. So what is going on? Let me tell you what this is going to be. Oh, sorry, I didn't mean to do that. Okay, we have an agenda for these days. We have strategy Saturday and psychology Sunday. We're going to start the day on Saturday, right out of the gate, guys. I'm going to teach you my strategies, the ones that I use every day. Okay. Now, guys, I don't work like everybody else out there. I'm not going to give you these ridiculous promises or this or that, right? I think they can work for you because they work really well for me, but there are no guarantees in this game. But that's what we're going to start with. Okay. And then I'm going to teach you how to build, test, and deploy new strategies. Okay. There's an old saying, which I'm sure you've heard, teach a man to fish or give a man a fish. Okay. I can teach you a strategy. I can give you a fish. I can also teach you how to build your own and teach you to fish. Why not both? Why can't I give a fish to a guy and then go teach him how to fish, right? He'll probably do better if he's not hungry. So I always say, what's the commercial with the tortillas, right? And the little girl says, "Por qué no las dos?" Why not both? I say, why not both? And I'm also going to teach you how to build and execute a trading plan. The most underrated skill, guys, the most underrated skill in all of trading is how to build and execute a trading plan. Then we're going to do Psychology Sunday. We're going to talk about the 4 biggest mental trading errors. We're going to build a trader's mindset. This is one of my favorite topics to do, guys. I have not refreshed this presentation in about 2 years. I just started to do it last night. I am so excited to go through this. And then we're going to teach you how to trade with confidence and not freeze up when you spot a trade. One of you were just talking about, giving you being gun shy in the morning. Now, one thing I did not put on this, guys, at the end of the session, so Sunday, we are going to design and build our own trading system from scratch, and we're going to test it together over the coming weeks. I'm going to set up a private Discord, and if you come to the summit, you get access to the Discord. And for 2 weeks, we're going to test it every day. You guys can test it along too. Don't put an eval account on it. Don't put real money into it. It's just going to be simulated. I hope it's successful, but that's not the point. The point is to teach you how to build a system and teach you how to do this stuff for yourself. So this really isn't just a weekend thing, guys. It goes on for a couple of weeks. Okay. So what are you going to get through all this? Okay. You're going to get 5 hours, plus probably more than that. I'll say 5 because I feel comfortable saying that. It'll probably end up being more of live interactive instruction. These are going to be recorded, and you're going to have lifetime access to the recordings. They're going to go up on my website. You'll have access to them. I'm going to give you my trading as a business course. If you've never built a business plan for your trading or a SWOT analysis, strengths, weaknesses, opportunities, threats, you have to treat your trading like a business, guys. You have to budget it. You have to have your goals. You have to, how are you going to achieve that? You have to bring your stakeholders up to speed. If you're married, guess what? Your spouse is one of your stakeholders. Okay. So, I went to, business school without knowing what the hell I was going to do with it. And now I've actually put it to good use for the first time in 20 years. And again, the private Discord to ask follow-up questions, track our new strategy. Guys, this is all available, and we're doing an early bird special for the first 25 people for guys $197. That's it. So basically, for less than the price of three resets, right? Basically the same as a 50K account. You can attend this, and guys, again, this has all been designed for you guys. And this is not the first 25 guys is not a marketing gimmick. After that, if you want in, there's no exceptions. It's $350. Okay, so I really hope you'll jump on with this. Again, in 1 hour, this email goes out to my full email list, about 1,500 people, and they get a crack at it too. But I designed this for you guys, which is why I wanted to give you first shot at it. So if you get on board here, you'll get access to this trading as a business right away. As soon as you click through, it'll be in your members area. And you can spend the next couple of weeks putting together your business plan. And then the 25th and the 26th, guys, we're going to have a retreat. I love these events. I did one of these last year. It was a 3-day event and it was exhausting. And quite frankly, I charged a lot more for it. I charged about $1,000 for that, and I still had about 40 people show up. It was amazing. I love doing these events. So I really hope you'll jump on board with this. If you have any questions, I'm going to be in Discord here for probably about a half hour afterwards about this. So right now, let's do our giveaways. If Josh has been kind enough to compile the list, if not, let me pull up our wheel o names, and we will get going. All right, I've got to clear out the last ones. All right, just a second here. These are last times. Let me delete these. All right, thank you there, Josh. All right, guys, just a second. Okay, so the first spin is going to be for the Blue Sky account. All right, so here is that spin. All right, looks like Hey Jar, you are the winner. I'm assuming Josh will reach out to you and let you know. Okay, so here is the spin. Get you out of there, Hey Jar. You can't win them both. This is the spin for the coaching session with me. It's a one-on-one. We'll call it. It'll be at least 30 minutes, probably a little more. So let's go for that. Ooh, we just crossed over there. Okay, John by Grace. I will be reaching out to you as well, and I'll send you a link to get into my calendar. All right, so guys, I will stick around for 10 more minutes to the top of the hour with any questions that you have. So what questions do you have? And if I missed any from earlier, guys, I apologize. Put them right back in the chat. No, I just clicked off it, so I can't do another one just for fun. Sorry, guys. And I'm going to put the link to jump on board with the summit right back in here. Tips on not blowing up every few weeks after weeks of consistency. Well, Nick, not to completely be a dork with it, but we're going to go over a lot of that in the summit. That's a tough question to answer in. I mean, again, guys, if you've reset 3 times, in the past couple of months, you'll get a lot of value out of this. Hopefully, we'll keep you from resetting 3 more. Contact me for possible mentoring is just DM me. Everybody here has my permission to direct message me. I'm not on Discord at night. I completely disconnect in the evening. So if I don't get back to you till the following morning, please apologize, or please excuse me. Here's my personal email, guys. And again, this is directly to me, and I try to get back to all emails within 24 hours directly. So if you want something a little more intensive, a little more mentorship, let me know. I have a mentorship program, guys. And listen, I'm going to be honest with you. It ain't cheap because it's a lot of my time. But I basically get in your hip pocket and I'm on you for 6 months. That's basically what the program is. So, but again, that ain't cheap. It's a lot more than 197. I haven't offered any teaching that I do for this low in quite some time. I'm doing this because, again, I think this is the best way to keep a cost down for you guys and for you guys to be able to attend this. Yeah, no problem, John. Like I said, I'll reach out as soon as we're done here. I'll send you a link to my calendar. You can go in there and just pick whatever works for you. Okay, so but Nick, as far as tips on not blowing up, okay, so if you're having weeks of consistency, basically you got to ask yourself what's changed. Sometimes it's just the markets. Okay, sometimes the markets are just crap trading for any given style. So that's the honest question you have to ask yourself. Are you doing something different now than you were during those weeks of consistency? It's why a trade journal is very important. And guys, I say trade journal, and everyone just assumes something like Trader Sync or Trader View and just put the charts in and put it. No, you need to be writing down your thoughts and your feelings every single day. You really need to be keeping like a trade diary. All right. So that's again, that's something that wait, where did I get it? Okay, let me make sure you back to chat. How do you come up with edges? Do you use traditional indicators like MACD, RSI, etc.? Indy, you can one single indicator can give you an edge, but you got to test it. That's that 3-step strategy, guys. I have the how to build, test, and deploy new strategy. I have a 3-phase system that I put every potential setup through. Sometimes it takes a month, sometimes it takes 6 months before I put a dime of my real actual money into it. And guys, it's a lot of work. No. The 197's for the weekend index. The 6 months is it's a separate program. If you're interested in that, that I only do that by application only because it's a small community. You get lifetime access to the community and all that. I don't want to get too much into that. I want to focus on just this summit. No, the 197 is for the weekend, but you also get a course I used to sell for $500, and you get these recordings. So you're basically getting about 8 hours of material, and access to the private Discord that'll be open for about 2 weeks. Where whatever strategy we put together, again, how do you find an edge and how do you test it? That's what we're going to do. Preferred method for back testing. I do put some things through back testing, but I really put most things I put through like front testing, right? Like if I come up with a setup, I'm going to spend probably a couple weeks just looking at it. Just at the end of that's phase 1, guys. I'll spoil that a little bit for you. Is finding a setup and then going back at the end of the day and just hey, okay, this setup happened 5 times, 3 times it was successful. That's it. And then it gets a lot more complicated going into some of the rest of it. Gerald, you're right. I'd say you're 90% right in that situation. Again, that's why you have to be able to evaluate those things, right? You have to be able to be honest with yourself. We don't like being wrong. Being wrong, and guys, even it's just amazing to me in this society, and of course, this is led by a lot of our quote unquote leaders in this country. People just don't want to admit they're wrong, right? That's like they physically can't do it. Well, that's why a lot of people lose money in the market. Well, I'm not wrong. The markets are wrong. Well, guess what? The market took your money. I like people like that in the market. Those are the people whose money I take. Those people paid for my car. Yeah, I just spent somebody that did last week got into the markets knowing what they were doing and did some stupid stuff. They're the ones who just paid for my next vacation. So God bless them. I'll toast a beer to them in St. Louis. All right, let me see if I caught any more of these questions just for a couple more minutes here. All right, I'm going to take 2 more questions, guys. According to your experience, what's the most common trade management mistakes and what's the solution to them? Did you get here late? I mean, I kind of went over those. Let me right there. All right, one more question. And again, guys, you're always welcome to direct message me. How long have I been a trader for? Let's go back to the bio. There you go. Full-time trader since 2014. Now, I spent about 3 years before that learning about the markets, before I got in. And then 2014, I got my teeth kicked in, guys. I was down 40K by the end of 2014. Had it all back and then some by the end of 2016. And it's been full speed ahead ever since. Not saying I don't have red days or red weeks. Happens to everybody. Anybody who says they got it all figured out, well, I'll go work for them then. I can. Hmm. That would be outstanding. So yeah, again, guys. So you save 150 bucks by being one of the first 25 people in the door. I anticipate that being the case. I anticipate to run out of those by probably the open tomorrow. Because again, I got an email going out in about an hour for that. Well, less than an hour now. And I know my guys will jump on something that, because I haven't offered something this low cost in probably 2.5 years. So, but again, this is designed. I'm giving you guys first crack at it because it's designed for you. These are based on the conversations I had with you. Again, teaching you my setups, and then also teaching you how to build your own. And I mean, again, I'm going to give you a fish, and then I'm going to teach you how to fish. That's basically the goal of this. And guys, again, I don't do things that are that complicated. A lot of I don't use anything that's proprietary or belongs to, it's generally, indicators that as we like to say, out of the box. I tweak some things here or there. And again, like I said, no guarantees anything's going to work for you guys. But even if you don't use, again, my humble opinion, if you don't use a single one of the strategies that I teach you, you're still going to get a couple grand's worth of information that weekend, right? That's what, and again, there's going to be a ton of follow up there as well. So, all right, my friends. So that is it for me. I can hear my dog yelling at me from here to come home and let him out. So hope to see y'all in the summit. I'll be around. I'll probably sit down with these guys, work out. We may do one more event before the summit, and we'll go from there. But again, first 25 get the discount, but there is no limit after that in terms of the number of people that can come on. So, all right, my friends. So you all be well. Thanks for coming out, guys. The people that stayed till the end of this, you're my favorite people because you're the ones willing to do the work. And trust me, that just the fact that you stayed for an hour afterwards, you're the type of people I want to work with. So I hope to see you at the summit. If you want information on some of the more intensive mentorship stuff, let me know. But as I said, it ain't 197. So because it's a lot of time on my part. So have a great rest of your day, guys. I will see you probably in the room tomorrow, and have a great weekend.